Happy New Year and welcome to the Year of the Snake. So the Federal Reserve has been very consistently data dependent. So depending on how the data comes, that can help inform policy. If they continue to be data dependent, and if we continue to see the types of data that we've seen in recent months, it's very difficult to make an argument for cutting interest rates much more. The Fed has heavily implied that it will cut interest rates at least a time or two this year. As we're recording this, we've just gotten a very strong December NFP report out of the US. So if we continue to see strong data like that, I'm skeptical that the Federal Reserve will be able to deliver 2 rate cuts. They might get across the line for 1, just because it seems like it's sort of fulfilling a commitment to an extent, if you will. But if they're being objectively data dependent as it stands right now, I don't think there's a strong case for cutting interest rates further. So I would anticipate 0 to 1 interest rate cuts, again, depending on what happens with the data and pending any surprises from the Federal Reserve. And markets are starting to come around to that view as well. And that's why we've seen so much strength in the US dollar, because we've simultaneously seen strength in the US economy with inflation above the Fed's target, jobs holding very strong and steady. That those factors combine to point toward a neutral, or maybe even down the road, potentially hawkish Federal Reserve that could continue to support the US dollar. After back-to-back plus 25% years for the S&P 500, even stronger for the NASDAQ, it certainly raises some alarm bells for students of history that have been following the markets. But a key thing to note is that a lot of this rally has been supported by a rise in earnings. Indeed, across all of 2025, traders and economists are expecting earnings to grow by about 12%. The key factor that has led to the strong stock market performance in recent years has been an expansion of the multiple, or what traders are willing to spend or pay for those earnings. So that'll be a key dynamic to watch. It all comes back to optimism about the future, the benefits of AI in terms of efficiency and driving revenue. I think 2025 will be the year where that rubber hits the road for that theme. If we need to see some of those promised efficiency gains and growth and new revenue and profits emerge to continue to support this rally. But I think that's definitely a possibility given how exciting the technology is. So I wouldn't necessarily be looking for a down year for the stock market even after such a strong run, because it's being driven by earnings and a key fundamental theme that could truly be revolutionary. Bitcoin's in a very interesting space right now because prices have stalled in the recent month or two, but from a longer term cycle, generally speaking, after the halving, which took place in the middle of last year, we tend to see prices expand for about 70 to 90 weeks before reaching a peak. So that would project higher prices for Bitcoin across this year, with a potential peak emerging in the latter half of the year, or maybe in early 2026. So as we continue to see institutional adoption of the asset class, certainly incoming President Trump is very supportive of cryptocurrencies. Those are some fundamental themes that could align with the technical cycle that suggests Bitcoin could have a strong, certainly first half of 2025, and potentially even throughout the entire year.